Good afternoon, ladies and gentlemen, and welcome to this afternoon's Markets Now session. If you could give me a quick sound check, please. Thanks, Ali. Appreciate it. And good afternoon to you. Good afternoon, Jack. Good to see you, buddy. Thanks for the heads up, mate. Yep, good job. All right, team. Well, we've got quite a bit to get through this afternoon. We're going to, as I mentioned, it's going to be a full-on reflection period and key takeaways of 2025. This is not just going to be regarding trading performance or individual progression. This is going to be everything. 2025 for the UTC as a business, 2025 for its clients, and what we've managed to achieve with the individuals who have come on board this year, and yeah, just taking some time to reflect on everything that's happened throughout 2025 as well itself, and all of the various economic battles that the G8 and G10 have seen as well. So what we're going to be focusing on really, the key angles that we're going to be covering, I suppose you could say today, is the fact that we've seen a huge shift from post-COVID stimulus to policy restraint. I think we can all say that we've seen central banks across the world really trying to fight the fires of inflation that were caused ultimately through the COVID pandemic. And I would say probably further that it's been quite unsuccessful as well. We're still seeing inflation numbers that are quite high. And yeah, we've still seen quite high inflation numbers. We've still seen interest rates higher for longer, and we've still got the same kind of messaging at the end of 2025 with regards to interest rates as we had at the, I think I said at the beginning of 2025, as we've heard at the end as well. So the tone's not really changed there too much. We also saw in 2025 and throughout the year who is probably going to be more susceptible to losses and ultimately not be able to make it as a trader as well. As harsh as that sounds, I think we've seen 2025 as quite the year for siphoning out those who probably won't be able to make it and those who probably will. It's been a difficult year. It has been a difficult trading year, and yes, the performance that we've seen from the fund itself has been very impressive, and that's great, and we'll dig into those numbers down the line as well. But it's not come easy. It's not come easily, has it? You know, there's been a great period of time where we've seen little to no return. There's been a lot of ranging markets. I think looking at the end of year numbers, there were about 89% of the FX space actually ranged. So if you look at the year change, you know, like we do on a daily basis, when we look at the daily change percentages to find out where the volume is and where the volatility is in the markets. Well, if you look at the year change, most of the FX market hasn't actually changed much at all. We've had a couple of outliers, a couple of major movers, predominantly due to geopolitical events more than economic policy events. But yeah, most of all, we haven't really seen too much progress. But this ultimately, you know, this really reaffirms the UTC's philosophy as well, and that's the fact that we adapt to markets and not necessarily opinions. And it really does reaffirm that, because, you know, I built the UTC to stand against public opinion, and when I say public opinion, I mean, you know, more, well, the social media gurus and, you know, nefarious enterprises and stuff like that are so prevalent at the moment out there in the industry. And we've still managed to hit 2025 strong and come away with pretty significant returns for not just, you know, personally, but every single one of those positions at the end of the day has been provided out to you guys, and you've been able to reap some of the rewards at least, which has been really good as well. Now, in terms of the UTC ecosystem, we as a business have continued providing live trading events and analysis, and have been a hub, I think it's fair to say, a hub of this information for you all on a daily basis throughout the majority of 2025. I feel that the UTC has done a relatively good job at keeping you informed and keeping you up to date and giving you a streamlined process of what the markets are doing, what the economics are saying, and how to action particular trading opportunities as a direct result of that. So I think that's been really good, and I think the UTC business model and everything that we've been trying to do here, it works, and that's been pretty good as well. We also introduced the Pulse mentoring program as well, which several people have decided to take on board. More than several, to be fair, a fair few, and that's gone really, really well. And looking at the progression and the development of those individuals as well, you know who you are. I won't shout any names out there, but that's also been really good to see. And looking at some of you who are now well on your way to becoming funded individuals, and taking that next step in your journey, and sort of moving on from being with me and under sort of my wing has been really, really good. Really, really good. Very positive feelings about all of that process. And as far as the feedback is concerned, it's been outstanding as well. So really happy to see all that. Now, this is a good segue into the people we've helped. We've had traders arriving with next to no structure or emotional discipline coming through the doors on a continuous basis. Yeah, don't worry, Jack. I'll answer that question at the end of this segment. So yeah, we've had a lot of members over the course of the year. Do you know we've actually had through the doors 87 new individuals who have come through our doors. Not all of them have remained, paying. Not all of you have continued to pay for the everyday service due to different circumstances, predominantly being, financial circumstances. The world's in a bit of a shit show at the moment, so it's understandable. But you've all made the most of it. Or most of you have, I would say. Most of you have made the most of it. And the feedback behind the scenes, again, on this front has been really positive. And it's a lot of it's come down to structure and having a direction, which I find is quite a common thing with retail traders who come through the doors. They've oftentimes been inundated with a bunch of information online, watching so many videos on YouTube and whatnot, and then they find the UTC through whatever means they have. And generally speaking, this is where they find that clear line. They know what they need to do, and they have a plan set out in front of them to go and execute it. So that's also been really good to see as well, because it's almost like you're finding, everyone needs to find their path, but we can definitely say that we've improved that pathfinding mission for you. And this is just purely based on feedback that I've gone around and collected with a couple of associates inside the trading room. So that's been really good, really, really good to hear. The members, I think I can speak for, again, most of you when I say that you guys are learning when to sit on your hands. 2025 has certainly been a year where we've had to sit on our hands, I would say, a fair bit, and I think we can credit what we do here a little bit to that fact, that improvement, which is good. We've also got an improvement in how questions are being asked and the process towards outcomes. Especially I would give a little bit of a shout out here. I don't want to name too many names throughout this live event today, but I would give a bit of a shout out to Jack, because Jack is generally not afraid to ask for workshop lessons, and if there's anything going on in the live events that he wants to know more about, he asks, straight up, let's, how does this happen? Or why does this happen and what's the process here and so on and so forth. And it's, as someone who sits here on the other side of the screens, I sit here in my trading den, and it's not always easy to just off the cuff, chew the fat about various educational topics. Sometimes that instigation from community members is really important, and having that instigation from the members here is really good. So that was appreciated, and I think it would be good to make a note that there should be more of that in the new year. 2026 should be a year of development in all areas, and that would be really good to see more questions coming through the door, more questions being answered, and and more sort of and more greater emphasis on education, I suppose, in providing you the insights that you really need. I've already kind of covered mentees moving from retail thinking to professional frameworks. And so that's really predominantly down to Pulse, which is a good segue into your question, Jack. So Pulse is the UTC's mentoring program, and it's a separate sub business of the Underground Trading Group. And that's what that predominantly focuses on. It's private mentoring. There's not many that are done per year. There's a maximum number of students per year, because I don't wish to take on more than a certain amount. But that's what that is. And I think finally as well, it's worth noting that we've had a major culture shift away from the gambling mentality towards capital protection. And this is just based on people's responses to questions, or looking at the way they've commented towards a certain area. There really has been a big culture shift away from that kind of, I'm going to take a trade here, or I'm going to go for it there, because of there's no kind of explicit outline, no kind of explicit rules or process there. It's just for the sake of, I want to be in the market, I want to be in a trade, so I'm going to take that one. And I've seen this on a mass scale. I mean, obviously, I'm talking about possibly 60, maybe 60 individuals here, but that's changed. And there is much more reliance upon process now, and following that process, and having that discipline and getting it down to a T. And that is, again, really, really positive, and something really good that's come away from 2025. So let's think about now trading styles, what trading styles have been covered, and why it matters. So we've been focusing a great deal on day trading this year. I would say probably day trading / intraday has become the new norm. And this isn't going to be a permanent fixture. Oh, sorry. Actually, day trading and intraday trading will always be a permanent fixture. But I think in 2026, I do want to open the doors for a more consistent, longer term background influence. The natural gas position that we ended up closing for over 5.2% net at the end of this year was a real testament to what can be achieved whilst we have everything else going on at the same time. It didn't really add any additional undue stress on the portfolio or me as an individual trader, and the management of that was, I think it was okay. I mean, I can take criticism on this if anyone's got any, but I think the weekly updates and the stop movement and the trade management process, it was all pretty good, and it didn't feel like it put any undue stress on in the entire process. So I would like to make that more of a consistency to 2026's framework for the portfolio. We had a lot of intraday trades based on structure, based on breakouts of session highs and session lows, lots and lots of news event trading, liquidity grabs, and so on and so forth, which was really prevalent. I would say that what are we talking about here? The break of structure entry criteria for breakout trades probably took about 90% exposure of the portfolio, which is incredible considering 2 years prior to that, BCRs were probably at 95%, and simple breakouts weren't really the mainstream. But we have become much more aggressive in our approach to the markets. And you know what? It's paid off. So I don't think there's any reason to necessarily change that style or theme of getting into the markets. I think based on what's up and coming in 2026, especially when we consider the economy of the world, the global economy, I think we're probably going to be falling on some pretty turbulent times. As I usually do say this at the end of the year, but it just doesn't seem to end at the moment, unfortunately. But we've got a lot coming down the line. We've got governments that are just kind of folding over. We've got a US White House which is siding with China and Russia, and moving away from Europe and the United Kingdom, which we've still got 3 years left of Trump's term, so we don't know what that's going to look like. It's been one hell of a crazy year in US politics so far, so to see where that goes in the following year is going to be something. We also have a lot of friction inside the US White House now. I'm not sure if anyone has been keeping up to date with what's been going on in the US politics, but even some of his most trusted advisors, chief of staff, and so on and so forth, are coming out with some, I would say, some pretty damning things. So what change is going to take place there? And what could that look like? There's been the talks of things like even civil war for a long time now, and I don't feel like we've ever been closer to a war of a certain type or a certain breed as well. So that's going to be filtering down into economics throughout the 2026 as well. So, like I say, a relatively turbulent year up and coming, but stay tuned for next Tuesday's session on, sorry, not next Tuesday, the following Tuesday session on 2026 outlook, because everything will be listed in there. But it's important to be flexible with the time frames in our trading anyway, going back to the main point at hand. And I think having long-term investment strategies in certain assets, energy markets, for example, it's been really, really beneficial. And I think we can probably push that out into 2026 in a more consistent fashion to just give us a little bit more of defense against what may happen over the course of the year. Now, in terms of markets that we navigated, I mean, we were trading pretty much everything, weren't we? US indices, where we saw major rotations. We had a lot of various major daily false breakouts and stuff that we were able to get in on and avoid as well throughout the course of 2025. The FX market, we had an absolute storm in. We had loads of things going on. There was a lot of US dollar dominance, I would say, throughout 2025, a lot of dominance phases, and there was a fair bit of mean reversion from the USD, but ultimately it did pay off and we did do well. I think the FX market on its own, excluding the US indices and commodity spaces, we had a relatively decent win-loss ratio overall, so around a 60-40. I think it was like a 59.97, just looking back at the numbers here. So that's not too bad. So we were up on the FX space. We had a lot of pound volatility as well. We had a lot of rate decision events and various other economic policy mandates that were coming out about the GBP and the state that the UK's in. This is predominantly around rates, growth, fiscal credibility as well. We had rates and yields driving equity behavior. So there were quite a bit of volatility in the equities across 2025. And with the introduction and the rollout of the market report, many, and I'm not saying this lightly, but many of the equity picks that were in the report yielded significant returns. I didn't trade every single one of them, or buy into every single one of them, but they did make a very healthy return. So that was something that was really, really good to see. And in obviously like back testing, but looking back in time at some of the equity picks that we did come out with, I mean, some of those things, they were 20, 30x returns over the course of a couple of weeks. And there were a number of them, big number. So I think for anyone who's possibly interested in equities and wants to have a go, trading 212 or whatever retail broker you guys want to use, it would probably be a good New Year's resolution to actually take the equities a little bit more seriously as possibly an additional income stream, additional revenue stream. Just play around with very, very tiny amounts of money, get a feel for it. It's really simple to do nowadays. It's not as scary as it once was investing in equities. So it's definitely worth having a look at. And it's always a good idea as well, getting a diversified portfolio in difficult economic times, because it can make you very robust throughout the volatility. Now, I think that's a pretty good segue actually into the reality of 2025 market conditions. So inflation has been really sticky. We've had sticky services inflation versus easing headline prints. The market's been constantly repricing the higher for longer, which we already touched on at the beginning of the session today. Data dependency as well, which has created violent short-term reactions. Obviously, we've had US government shutdown, we've had delays in the data, which has caused a lot of, I would say, there's been periods of volatility, and then there's been whole entire, bi-weekly areas of just stagnation where we've seen nothing at all, and we've had to kind of weather those storms and just ride it out until we get the releases. But it has been a bit of a mess. In terms of interest rates, we've had the Fed walking the tightrope between inflation and growth, which has just been ongoing. We've had rate expectations, which have shifted multiple times throughout the year. Time and time again, we've seen this. It's just, there's no real follow through or consistency to it, because there's just so much pressure on them at the moment. Inflation is not going as quickly as possible. We've had the Trump administration laying on trade tariffs to every nation around the world, and with no kind of understanding of the consequence of that on the local economy. We've had BOE lag, which is BOE lag dynamics versus the Fed as well. The Fed kind of leading the charge, weren't they? Especially towards the beginning of the year, and we just didn't see that follow through with the rest of the nations. I mean, the BOE's just recently cut rates, I think, and just kind of lagging behind. And then we had yield volatility driving the equity and FX volatility as well. I know you guys haven't really possibly seen too much on yields, but it has been, rest assured. USD strength during risk-off phases has been quite prevalent, but we haven't managed to break back above the range highs. So the US dollar has been trading within the margins for a great deal of time now. So we've got to wait to see where that one's going to go as well. We've had dollar as both a risk barometer and a liquidity signal in various things that we've been looking at. Some of the FX positions that we've been looking at, some of the indice positions that we've been looking at as well. So it's kind of taking a new turn, the US dollar, because usually it's a risk barometer. Okay, that's usually its role, but now it's taking on the role of liquidity signal as well. So it's an interesting one there. UK growth concerns versus inflation as well. We've got a great deal of concerns about inflation at the moment in the UK and what growth looks like versus that inflation. Probably not going to be a great 2026, to be honest with you. It's probably going to be slowing down, still continuing to. We've also got Europe struggling with growth, energy sensitivity. We've got divergence between US resilience and global slowdown as well. So there's a great deal of things going on at the moment. I mean, I think some of it's going to come to a head in 2026, the rest of it in 2027. But we're definitely starting to see the cracks in the system. So it's going to be a real interesting year. 2025, to be honest, I was expecting a lot to happen in 2025, and it hasn't yet. So I'm sort of kicking the can, let's say, kicking the can down the line and seeing where things head up in 2026. Market behaviors, though. I mean, we've had choppy price action, haven't we? We've had failed trends. We've had liquidity hunts all over the place. We've had narrative-driven rallies that are ultimately short-lived and quickly reversed. It's not been easy. I would say this has been the case for the majority of 2025. It's been a difficult one out there, guys. It really has. And you've made it through to the other side. If you're a new trader and you started your journey in 2025 or maybe a couple of years ago and you're still here at the end of 2025, then good on you. And I don't say that lightly. Seriously, good on you, because it's been a tough one. It really has. Now, trading performance. Over the course of 2025, our UTCF returned 157.24% net return over the course of the year. I won't be taking, there's no more trades, and there hasn't been for a while, but there is no more trading activity until, whenever I start in 2026. So, end of the first week of January or whatever. And so, as it stands, 157.24% net return across the year. And this was achieved across multiple assets and throughout multiple mixed market conditions as well. None of them being ideal. Excuse me. So that's really good. I'm really, really happy with that. We had an asymmetric risk profile of 2.9. That's a risk reward over the total account of 2.9 over the course of the year. Now, if you want to go get yourself a job at one of the sort of leading funds, you are looking for a risk reward minimum of a 3.0. A 3.0 and that is master race. So having a 2.9, even though it's not a 3.0, and I'm a little bit gutted. 2.9, absolutely brilliant. I'm really, really chuffed with that. We averaged out a 12.9% average monthly gain. So, and this is without abusing any kind of leverage or anything. You guys know my risk profile, my risk strategy. It's outlined to you on a daily basis, no more than 0.25% of your account per trade. Tiny little amounts. So we don't care when we lose, but we're always looking for a 1 to 2, 1 to 3 risk reward. And we're just getting a double return on our risk every single time. So again, very good stuff. And we averaged out at a 3.1% weekly average consistently, which was the average over the course of the year. So 3.1% every single week when you average it down. Now, how was that performance actually achieved? So a few concrete points here. Fewer trades, better quality. So before, there used to be multiple trading in a US session. And I mean, I'm not talking about the maximum of 3 that we're kind of used to in 2025. I'm talking about the fact that I used to walk away from a US Open session with 8 to 10 trades. Okay, now that is a great deal, Now, it's not just for my personal, it's not just a personal change that I've set this up. Yeah, no problem at all, Jack. Yeah, you take care, my friend. I'll see you later on. Yeah, so it's not necessarily a personal change or anything that I, consciously decided to do, but it's more for the benefit of the room, more for the benefit of the community here that I've decided to cut those trades down and create a 3-trade maximum limit on the US Opens and the European Opens, because it limits your choice. It limits the amount of noise that you guys are going to be having to deal with. Right, so you're going to be looking for that quality over quantity, and you're not just going to be thinking to yourself, well, I've got endless trades I can take, so I'm just going to take everything I see. And I've done that on purpose, and it's worked really well, so I'm happy about that. We did a lot of scenario planning, so we had events like CPI, Fed events, the FOMC, we had non-farm payrolls, we had PPIs, and all of these events were planned for ahead of time. We knew they were coming. We understood the numbers. We understood the context of the market. And we were able to execute those positions with a good understanding of what was happening around us. We had execution based on confirmation and not prediction. We knew where our breaker structural elements were. We were able to utilize pending and limit orders extremely well. We could let the market just do what it wanted, flex and breathe as it wanted. We had our orders in. We didn't need to stress or worry about anything else. There were no predictions or anything like that. It was just purely down to execution-based confirmation. We accepted being wrong quickly, didn't we? We took a trade. If it was a loser, that was great. Sometimes we had a second attempt, and that was that. And we would move on, and we'd be done with it. And we would always avoid overconfidence during winning streaks. And that goes for all of us. We'd have some good winning streaks sometimes, and they were good, but the market would always come back and humble us, and it always does. So don't ever think that the market's got nothing left to give, because it will. As soon as you relax, that's when it gets you. Now I want to talk about a UTC core differentiator between what I feel our community gives and what others lack. And this is teaching why traders, or teaching why the trades work specifically. It's not every day we're looking at a multiple, spamming event of a bunch of trade ideas and just, throwing enough stink at the wall, seeing what sticks. Right? It's a process. Even through the live events, it's just another series of processes that are carried out on a daily basis. We're looking at this as a potential opportunity. This is why we're looking at a potential opportunity. These are the margins that are available. This is how the liquidity is at the moment. This is where your cash-rich areas are, and this is why we're going to go for a long here, because the market's moving away from this area of liquidity. You have an opportunity of an educational undertone in every single trade that we take on a daily basis. This isn't just done naturally, it's done with purpose to give you all the absolute utmost opportunity that you can to learn exactly how the markets are moving and breathing, but also to be able to have to have an income at the end of it as well, in order to be able to take these opportunities that are yielding the returns. We walk through the invalidation logic, so we understand why a trade wouldn't work, or why this process wouldn't play out properly, and perhaps why we don't want to take that trade. We do the live breakdowns of the losing trades. Losing trades are covered just as much as the winning trades are. So we understand why they went wrong. Most of the time, I'm happy with the process regardless, and that's the way it should be. But sometimes, I will talk to you guys and be very candid with you and say, look, I didn't see this before, or maybe I was a little bit overconfident. I'm very, very transparent and very honest with you about all of those kinds of things, because I am a human being at the end of the day as well. And this is something that I want for all of you to be. You need to be that way if you really want to make it as a successful trader. I encourage independent thinking. I want you guys to be able to go away and do this on your own. I don't want you to be a member here forever and always. I want you to come here and utilize this platform for a couple of years and then go on with your journey. Of course, stick around. I'd love you to stick around if you want to, but I don't want you to be reliant upon this platform. I want you to be able to independently think for yourselves with a good, thorough understanding of the process and the system that we're using. And ultimately, building traders who can operate without us, which is the segue, it's what I've just mentioned. Now, a little bit more about the business. Okay, I want to just reflect on the UTC's core values, and especially what I really didn't want to do and that I've stuck to. So what did we refuse to do in 2025? This is more around a business. No hype and P&L marketing. I can't stand social media. It's no secret. I hate social media. I do what I need to do because every business is reliant upon it to stay alive nowadays. It is a major part of business and operating a business. But I really do genuinely hate social media, and I hate hype marketing, which is basically what everyone seems to do nowadays. There were no fake perfect weeks marketed. no signal-only dependencies. There were no trading purely for content. And there was no pretending bad markets were good. Not a single bit of any of it throughout the entire course of 2025. Now, you might say to yourselves when you're watching this, why is this relevant? You know, what does this matter? But actually, if you think about it, I would really urge you to show me a single other individual, a professional with a track record in this industry, or without a track record. I mean, you'll have a list of them who didn't manage to come out of 2025 with a clean slate on any of those particular things. It's a hard job, honestly. Now, I think some of the key lessons traders took from 2025. Cash is a position. Flat days are winning days. I mean, that one is definitely a lesson that you should have been taking from 2025. We all experienced the markets this year. We all know just how up and down they were. So the flat days, they're just more winning days. The days where you didn't lose anything. Boredom. If any of you got bored, that's discipline, guys. Well done. Congratulations, you got there. So if ever there was a boring day in the markets and you're like, you know, this is lame, that's because you've actually found a little bit of discipline. That's discipline touching you. That's discipline giving you a pat on the back. Volatility is only opportunity unless it is structured. I mean, it's not going to be an opportunity unless it's structured. And survival of 2025 is growth. You made it through to the other side. You've made it through to the end. You're ready for 2026. You've grown. You've got better. You have developed and progressed yourself as a trader. Doesn't matter if you're making $1 million yet. Doesn't matter if you lost, $1,000 or a couple. Doesn't matter. If you've made it through 2025 in the grand scheme of things relatively unscathed, you are developing yourself as a trader. So well done. Now, I've got a great deal of gratitude for trust and engagement. And I think everybody who is here has one of those, but I would really, really urge you all to engage with the platform and with myself more in 2026. I appreciate that everybody has their own lives. Everybody has their own things going on. You've got work commitments. You've got different time zones to contend with. I get it. I appreciate it. But many of you also take part in the live events, or at least you do with an hour to spare. So maybe I've done it and then you come on in an hour's time and you get it on catch up. If you have any questions or anything at all that you want me to look at, please let me know. Don't fire it out in private, fire it out in the public chat and let me know. And I will get back to you, and I will be pleased to do so. There is not enough communication, I feel. And there just needs to be more. We need to ramp up the community engagement. We need to ramp up the communication. You have someone who has lived and breathed this industry his whole life, who has worked on behalf of some semi-sizable institutions. Not the mega ones, but some pretty big ones. And who has a professional background in this financial markets. Utilize that source of information as much as you can. Recognition of work done behind the scenes. So that's neither here nor there, really. That's absolutely fine. Next one I've got down here is a reminder that the results came from restraint. There was never a period of time where, there was excitement or euphoria at play. Well, possibly euphoria sometimes. To be, if we're being truthful, maybe euphoria sometimes. But generally speaking, the results of this year came from a restraint to overtrade and to gamble and to be, of that sort of way of thinking. So if you show restraint in the markets, you will you will succeed. You will see the results of that. Absolutely. You know, I've always said this. If you feel the need to rush into a trade, like you have to hurry up and open the trading panel and quickly put your numbers in before the market goes, it's the wrong trade. So having that restraint, that's what I'm talking about right there. Now, as we draw this chapter to a close in 2025 and this session in particular today, I would like to encourage you to rest and reset. I would like you to take the time to be with your friends, be with your families, and really unplug. Don't worry about what's going on in the markets. Don't worry about what's going on around the rest of the world, but really take the opportunity to unplug and rest your minds. 2026 is going to be a big year, not necessarily for anything in particular. It might not be the hugest year for economic policy. It might not be the biggest year for, you know, Trump's White House administration tearing the world down. It might not be, you know, the biggest year for much of anything, but it's going to be a big year for us. And we need to be ready for it. We need to do our best to be rested and ready for what's to come. So I'm going to end it there. If there's any questions, please feel free to ask them. And that's absolutely fine. But I'm going to wish you all an absolutely wonderful Christmas. Have an amazing new year as well. Of course, I am going to be streaming again on Monday and Tuesday. Not next Monday, Tuesday, the following Monday, Tuesday before the new year. So I will speak to most of you then. But I am going to wish you a wonderful Christmas week, and I hope you have an absolutely fantastic time with your friends and your families. And thank you, everyone, for being a member of this trading community for as long as you have. Every single one of you are appreciated. And I hope that I can continue striving to make this place the place to be for new traders and experienced traders alike, ultimately. So take care, everybody. It's been a pleasure as always, and I look forward to catching up with you soon enough. I'll see you then. Thanks a lot. Bye-bye.